Welcome to Bears in Exile. Today is August 28th, and this is our update to Vegas Baby. We'll be looking at BYD, MGM, LVS, and WYNN. And we're going to start off weakest to strongest, and so that means we're going to be looking at BYD first, Boyd Gaming. And this is a domestic gaming company. As we can see, it has been thoroughly trashed since July, leaving its highs at around $10 just below, and reaching a low of $4.91 in the last few days. And it did end with $5.50 on Friday, but man, what a smackdown this one has gotten. So looking at this, what do we see? Well, we see that we have a spinning top on Friday, and we can see that the short-term moving averages are all still slanting down. Yeah, it got a little bit of a pop-up, but really the direction is down. We have a very strong bearish bar, and the only really good thing about the moving averages right now is the middle Bollinger Band line is right in the middle of the short-term moving averages. It is not above it. So at least it has that going for it. Beyond that, we did have a slight uptick in the CCI. The fast and the slow stochastic are going up, and the 14-day RSI moving average is very low. And but at least it's not still going down. RSI itself is ticking up along with the histogram, and it looks like it's going to get a bullish cross on the MACD. So, secondary-wise, it doesn't look terrible, but moving average-wise, it certainly does. And if the fast stochastic is already this high and it isn't going anywhere, that's not a good sign. So, definitely, this thing has some major issues at the moment. Going to the 60-minute, we can see that the short-term moving averages have gone into a flat line. It's collapsing long-term moving averages, also turning it into a flat line. And on our secondaries, we have a downtick on CCI, fast stochastic rolling over, slow stochastic still marching up, and a slight uptick in the 14-day RSI moving average. RSI itself clicking down. Very slight downtick on the MACD histogram. MACD still positive. But certainly 60-minute on this sucker does not look good. We have divergence in the CCI, negative. We have a don't have one in the stochastic yet. We do have a slight one in the RSI, and we also have one in the MACD histogram. So not attractive. BYD, ugh. MGM, the king of Las Vegas. Well, what do we see here? Well, we have a almost spinning top looking candle here, just like BYD. We have the the middle Bollinger Band in the middle of the short-term moving averages is gone from $16 down to $10. Big beat down, and it has gap resistance, which it's fighting with right now. Side tick on CCI, uptick on fast stochastic, slow stochastic. But look at this. RSI 14-day moving average is still slanting down. RSI itself ticking up along with the histogram, and maybe we'll get a cross on the MACD, bullish cross. But there are some other indications on this that are really bad. We have the short-term moving averages that look really weak. It is trying to get a little bit of cross, but really it's all sloping down still. Beyond that, we have the price consensus levels, and the previous months, the lower one, it is below that, and so when it gets up to 12 or so, it should see selling pressure, which actually coincides with this little peak that we have back here. But this is ugly. Going to the 60-minute, we can see that it has gone into a flat line. It is trying to break out, but of this bearish bar, which is collapsing. But it is not strong at all. 14-day RSI moving average looping over along with the fast stochastic. Slow stochastic still going up. Side tick on the RSI, and rather neutral on the histogram. And then divergence wise, we have one on the CCI, we have one not on the stochastic, but we may get one on the slow stochastic in the near future. We do have one on the RSI, and we do have one on the MACD histogram. So in the 60-minute time frame, MGM also is not attractive. It looks weak. Then going on to something that is much stronger, LVS, the king of Macau gaming, and Singapore, actually. King of Singapore. You can see that it has a much stronger candle. It does have a little bit of shadow here and there, but still not bad. It did break to the upside of the lower price consensus level for this month, which is good. It has struggled with that and the major price consensus level. But look at the short-term moving averages. We had a bullish bar, we had the nasty crash with the market, and then it's fighting its way, trying to get back above it, even though it has turned into a flat line on the long-term moving averages. Middle Bollinger Band below the short-term moving averages, even though there is a lot of chop. TCI ticking sideways, stochastics, both of them slanting up. 14-day RSI moving average, not even in the oversold area, and it seems to be trying to turn up. RSI turning up, bullish cross on the MACD, and positive movement on the histogram. This looks very good. Beyond that, also take into account the previous month's price consensus levels. Here's the upper and the major. It fell through the upper, the major, and the lower during the market down, but you can see that it did fly back up, and now it is fighting to stay above the upper price consensus level from the previous month, which is a good area of buying. So, and that it broke the lower price consensus level for this month is very good. However, it is below the 200-day moving average, but and you can see that it struggled with it over here, but still, this looks much better than BYD and MGM. Going to the 60-minute time frame, we can see that the CCI is high, along with both of the stochastics, the fast stochastic rolling over, along with the 14-day RSI moving average. RSI itself ticking up, still bullish on the MACD, and we have the histogram also ticking up. Moving average wise, we have essentially a flat line in the long-term moving averages. The short-term came through it, went out above it, kissed it, and bounced off. That is great. So if it can clear the 200-day moving average in the 60-minute time frame, that will be fantastic. You can see that it had struggled with it back here, but if we get a break of it, that will be an extremely good sign. And do we have divergences? CCI no, RSI no, I'm sorry, stochastic no, RSI actually we do, along with the histogram. So it's not perfect, but it certainly has some levels that if broken would be a really good sign for this one to start turning up again. And then the king of gaming, WYNN, the best balance sheet, the best run casinos, but it doesn't have as many as some of the other guys. So how does WYNN look? Well, has some good things and some bad things about it. Short-term moving averages, not so strong. Middle Bollinger Band in the middle of it, but in the upper part of it, we can see the price consensus levels from the previous month, and sort of like LVS, it bounced off of them, but it did not clear the upper definitively the way that LVS has. It also has not broken the lower price consensus level from this month. Beyond that, the secondaries are very similar. We almost have a bullish cross on the MACD, histogram ticking up, RSI ticking up, both stochastics ticking up, along with the 14-day RSI moving average, which unlike LVS has gone into the oversold area, and a side tick on CCI. So, not a strong chart as LVS, but still not too shabby. Oh, I also did not mention it is above the 200-day moving average, which it has come into contact with and jumped off of it. It is the only one to be above its 200-day moving average in the daily time frame. So that is a very good sign. 60-minute time frame, just like LVS, it came down. It went back through the newly formed bearish bar, got through it, tested it, and it seems to be bouncing off. CCI ticking up, stochastics and 14-day RSI moving average ticking down along with the RSI itself, and slight uptick on the histogram, and the MACD is trying to figure out what to do with itself. But so in some ways not as strong as LVS, and in other ways stronger than LVS. So if it can break through the flatline bearish bar, that will be fantastic, and then we'd be looking at 155 before we have real selling pressure come in, if it can get through the flatline bar. Well, there you have it. There is the update to Vegas, baby, and hope you enjoyed it. I certainly love the casino stocks. The market is just a big casino, so casino stocks come natural. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.